Well, good morning, everybody. Great to see a number of our shareholders here today. Thank you so much for joining us. My name is Carol Schwartz and I am the Chair of Equity Trustees EQT Holdings Limited. I would like to begin by acknowledging the Wurundjeri people as the traditional custodians of this land on which the office is located, and we recognise their enduring connection to the land and pay our respects to their elders past and present. On behalf of my fellow directors, the executives and employees of EQT Holdings Limited, it gives me very great pleasure to welcome you to this 2023 Annual General Meeting. And I would like to acknowledge my predecessor, Jeff Kennett, who's here with us today. Thank you so much for coming. A quorum is present and I declare the meeting open. I confirm that the notice of meeting was dispatched to all shareholders in accordance with the company's constitution, and I will take that notice as read. Now, we will work through this agenda that you see on the screen today. Firstly, I would like to introduce you to my fellow board colleagues. Kevin Ely joined the board in 2011. Kevin is chair of the Audit Committee and a member of the Risk Committee. Morning, Kevin. Glenn Sedgwick joined the board in 2016 and is a member of the Audit Committee and Responsible Entity Compliance Committee. He also chairs our strategy board meetings, which all directors now attend as a full board meeting. Tim Hammond joined the board in 2018 and is chair of the Remuneration, Human Resources and Nominations Committee. He has also recently joined our board risk committee. Catherine Robson joined the board in 2020 after serving on our superannuation subsidiary board for 6 years. Catherine returns to chairing our superannuation trustee boards following the departure of 2 directors. She is also chair of the board risk committee and a member of the Remuneration, Human Resources and Nominations Committee, as well as chair of risk. She also takes part in the Audit Committee. Kelly O'Dwyer joined our board in 2021. Kelly is a member of the Board Risk Committee and chair of the Responsible Entity Compliance Committee, and she recently joined our Remuneration, Human Resources and Nominations Committee. Rob Dalton is our newest director, appointed last month, and I warmly welcome him to his first AGM with us. He brings over 35 years of extensive accounting and leadership experience across a range of organisations and industries, including as CEO of the Australian Sports Commission, and he holds numerous ASX-listed board positions. Rob was appointed a director of K&S Corporation Limited in August 2021, one of Australia's largest freight companies, and he joined the Hello World Limited board in November 2021. Rob is a member of the Board Audit Committee. Welcome. And Mick O'Brien was appointed Managing Director in 2016 after joining Equity Trustees in 2014 as a non-executive director. Mick is a member of the Board Risk Committee, but of course attends every committee meeting. Also representing the company here today are our Chief Financial Officer and Chief Operating Officer, Philip Gentry. Hi, Phil. And Samantha Einhardt, our fabulous Company Secretary. We also welcome Lainey Cochran from Deloitte, our Group External Auditors. We thank them for the quality of the independent audit services they provide to our group. Equity Trustees has once again had a very successful and busy year. Highlights included the significant acquisition of AET, Australian Executor Trustees Limited, and the continuation of our major technology investment program to drive innovation and efficiency in our business. At the same time, underlying net profit after tax of $29.1 million was up 19.4% on the prior year, and underlying earnings per share were steady at 114.38 cents. These excellent results were delivered in a challenging business environment characterised by inflationary pressures, volatile financial markets, and very tight labour markets. Our consistent performance reflects our strong culture and the high quality of our services in all our markets. But it is something more than that, and that's what I'd like to speak to you about today. Some years ago, we set our strategy to be the leading provider of specialist trustee services in Australia. At that time, the financial services market was characterised by big players who thought they could be all things to all people. And there has been an unwinding of that, which has been ongoing. This has provided opportunities to acquire businesses and to strengthen our market leadership. What sets us apart as the business continues to grow and as we continue to win new clients and mandates has been our ability to handle this growth. We invested early in the right people, and we've spent a great deal of time building the expertise and systems to manage the opportunities as they've arisen. We have built teams, we believe, with unique capabilities, skills and experience to provide the specialised services required by our clients. And our technology investments are ensuring we have the most productive, efficient systems and platforms to support the business. Our performance is a testament to what we've built, and it validates our strategy of focusing on specialist trustee services. Our clients and communities benefit because we believe we're focused on caring for their future, and our shareholders benefit through the consistent, steady returns. We also recognise that we depend on a talented, committed workforce. It is the engine room of growth in the business, and we are really thankful for their dedication and commitment. During the year, we continued to provide wide-ranging support to communities in need through our philanthropic giving programs. Equity Trustees is proud of its capacity to steward the funds of our generous donors, and our ongoing investment in technology and people will ensure we can continue to provide this support for years to come. The ESG imperative is placing greater expectations on organisations and leaders to reframe their role in society, as well as the ways social and environmental challenges are addressed alongside existing commercial considerations. Through our role in supporting people and communities, Equity Trustees already has a high sense of social obligation. However, there is always more that can be done, and in recognition of this, we are developing a new ESG framework and roadmap that will step up our reporting and commitment to more comprehensively address this absolutely crucial imperative. We operate in an environment that has increasingly complex regulatory and statutory requirements with unprecedented levels of scrutiny. Our expertise in this area and the importance we place on maintaining strong relationships with our regulators ensures we uphold our reputation as a model regulated entity. With a good balance of skills, experience, tenure and diversity, the board continues to provide a secure foundation for the business. I thank my fellow directors for their support and contribution, and on behalf of the board, I thank all our clients, people, shareholders and other partners for your tremendous ongoing commitment and support. Thank you for your time and attention. I will now hand over to our Managing Director, Mick O'Brien.
Thanks very much, Carol, and good morning everyone, and can I also give you warmest greetings to Equity Trustees headquarters. I'm looking forward to taking you through the FY23 results and also an update on the first quarter of the FY24 year, and particularly how we're travelling following the acquisition of Australian Executors Trustees in December of last year. Let me start by introducing the leadership team. I think it's important shareholders see the executive leadership team that have been delivering results for the company. We have many of the team here today. Philip Gentry, our Chief Financial Officer and Chief Operating Officer. I think Philip is well known to many, and particularly to our institutional shareholders, and has been with us for 8 years. Georgie Taylor, our Executive General Manager of People, who joined us over a year ago, a perfect time given all the people work that's been involved in bringing on the AT business. Ian Wesley is not well today and can't be with us, Executive General Manager of Trustee and Wealth Services. Ian's been with Equity Trustees for 15 years and brings enormous experience to our private client trustee business. Andrew Godfrey, our Executive General Manager for Corporate and Superannuation Trustee Services, our newly created combined division covering all of our corporate lines of business. Andrew joined the group earlier this year and has extensive experience in overseeing large-scale financial services operations. Samantha Einhart, introduced earlier by Carol, our Company Secretary. Sam joined us 2 years ago and has been an excellent addition to the team. Darren Thompson, who's in Sydney, heads up our increasingly important asset management team and has done so for the last 5 years. Owen Brailsford, our Chief Risk Officer, he's been with us for over 5 years, overseeing our enterprise risk function, which is such an important function in a business like Equity Trustees. And last but not least, and also not well today, Alicia Kokoczynski, our General Manager of Marketing and Communication, who's been with us for 8 years. 3 of this team of 8 have been in place for all of my tenure as Managing Director, demonstrating the stability of the team. But in the last 2 years, we've added Georgie, we've added Samantha, we've added Andrew, so significantly increasing our strength. And we've now really got a great balance between fresh ideas and experience across the team. Now, I'm pleased to report that 2023 is another strong year for Equity Trustees. Our funds under management, administration and supervision, which goes by that acronym there, FUMAS, grew by an impressive 7.5% on the prior year. I'll walk through the growth profile of each of the business lines a little later in the presentation. This measure is the main driver of our revenue, and you can see it's translated to a very healthy growth in revenue of just under 27% to $141 million. AET certainly contributed to this revenue growth, but it's important to note that the underlying revenue growth was 9.2%, which is particularly strong, given there was little movement in markets last year. Net profit after tax was $18.8 million and was $29.1 million on an underlying basis, and this represents a 19.4% increase on FY22. And the board chose to increase the final dividend by 1 cent on the first half to 50 cents, bringing the full year dividend up to 99 cents, up 2% on the FY22 year. Now, I've highlighted on this slide the progressive growth in funds over recent years, and it shows a really consistent pattern in growth, despite little growth in equity markets over most of this period. You can see AET has added $7 billion to our total funds. This addition will end up being about $5.5 billion after we exit the AET platform business. In the last quarter, just completed to 30 September 23, funds have increased by just under $13 billion to now be $173 billion. This increase has mainly been driven by funds flow rather than market movement, and the funds flow has been almost half from superannuation and half from our fund services business within corporate trustee services. So just as I mentioned in August at our full year results that we'd had some large fund movements out in the FY22 year, this quarter's seen very significant turnaround in terms of material positive funds flow in. Now, the company's in a very good position. We're in the middle of a 3-year investment in technology designed to improve our services to clients. Our strategy's been consistent and crystal clear, and as a reminder, the acquisition of AET gives us a leadership position in more states and more sectors of the private client market. We've combined all of our corporate lines of business into one division to allow us to align the operating models and to be more efficient. We've just announced the sale of the business in Ireland and commenced a managed wind down of the regulated activities of our UK business. That's going to make us a simpler business and, importantly, will make us materially more profitable in the future years. We're well advanced on exiting the AET platform business announced when we acquired the AET business. You can see here our two lines of corporate and superannuation businesses. The corporate trustee services funds under supervision was down 5.8% in the FY23 year, principally due to mandate losses by our fund manager clients. This represented some 9 billion of the net 6 billion decline, and it came from 4 particular clients, so it wasn't across the board of the portfolio. Excluding this, the business has continued to grow well in FY23, and the pipeline, which I'll comment on later, is very strong. Demand for dual registry listed schemes continues to be high, and our corporate trust business again experienced 20% growth during the year. On the superannuation side, we had an excellent year with the funds under supervision growing 29% to 44.8 billion, aided by bringing on $800 million of small APRA funds from the AET acquisition. The portfolio is now in a net positive funds flow position, with about 3/4 of the funds in a positive net funds flow trajectory and about 1/4 of the funds in a negative net flow trajectory. We're really pleased with our position in this market and the opportunities that we're seeing. Our Trustee Wealth Services business grew funds by 79%, principally by the acquisition of AET. If we exclude AET, growth was still an impressive 11%. The 11% is a considerably higher growth rate than normally experienced in Trustee Wealth Services. Pleasingly, the TWS growth rate is coming from all lines of business and each of the states. Asset management, funds under management, which is separately shown there, also grew by $500 million in the year, mainly as a result of transitions of the AET portfolios and some organic growth. In asset management, we also added a new strategy this year with the Spectrum Strategic Income Fund coming on board, now giving us an Australian credit capability to add to the responsible investing capability we added in the previous year. I'll move on to the shareholder results. You can see the progression of the earnings per share and dividends. Underlying earnings per share was equal to last year at 114 cents. The group result hides the material increase in earnings for Trustee Wealth Services and superannuation, which was offset by the earnings in corporate trustee services declining. The statutory EPS number at 74 cents was obviously down due to the one-off costs of the AET acquisition and integration, new management rights amortisation that came on as a result of AET, a write-down for the UK and Irish business as we exited those businesses, and the major technology build. We've had the new capital in the EPS number calculation there, but the associated earnings are only there for 7 months of this year. The full dividend increased to 99 cents, the 6th increase in the last 7 years after maintaining the dividend in the COVID impact year. At Equity Trustees, we strive to deliver for all our stakeholders, clients, employees, our shareholders and the Australian community. It's critical to a healthy company and such an important part of the culture of Equity Trustees. All of the measures we look at in these areas are moving in the right direction. Client satisfaction measures such as Net Promoter Score, propensity to recommend Equity Trustees, a Net Loyalty Score, a propensity to buy another service from the company, were consistent and remain at very positive levels. People are key to this business, and employee engagement and enablement both improved during the year. I'm really pleased by the commitment of our employees. Engagement is at 75, which is equal to the high-performing companies in the survey, and enablement moved from 73 to 75, which is also equal to the high-performing companies in the survey. Next year, we'll be looking forward to including the former AET employees in these results. For shareholders, earnings have been consistent and we've grown dividends again. Finally, for the community, we granted over $122 million to fabulous charitable and for-purpose causes. This is such an important part and history of Equity Trustees to provide stewardship over such crucial funding to the community over a very long period of time. Our total granting over the last 5 years has exceeded $500 million into the charity and for-purpose sector. So it's a well-rounded set of results and something to be very proud of. This slide shows our balance sheet position. The debt to equity ratio of the balance sheet, excluding the cash-backed ORFR reserves, or operational risk and financial reserves, that we utilise for some of our superannuation funds is 9.4%, which is very low. We aim to sit clearly as investment grade, albeit we don't have a formal credit rating. The majority of the high cash and liquid investments there, of 109 million, supports the required regulatory capital for the business. We retain substantial headrooms in our covenants, and we currently have surplus borrowing capacity of about 40 million. And this remains the case after the capital and debt raisings we completed during the year for AET. So we continue to have really ample flexibility for the business. So that's the results. Now let me touch on the strategy, which I'll add hasn't changed. Our company is founded on trust, as the name suggests. Our purpose is to help people take care of the future. How do we do that? Well, we safeguard their wealth now and for generations to come. We act as a trusted partner. We protect members, investors and beneficiaries, and we try to empower our clients and support the community. Our whole approach is underpinned by our commitment to three simple but powerful values: to be trusted, accountable to those that we serve, and empowering wherever we can. Now, I mentioned earlier about the importance of the AET acquisition. The acquisition cements our position as a leading provider of trustee services in Australia. We were already the leading provider of responsible entity and trustee services to fund managers, and the leading provider of trustee services in the superannuation industry. For Trustee Wealth Services, we were already the leading provider of philanthropic trust services and the leader here clearly in the Melbourne market. With AET, we add leadership in estate planning, estate management, the important health and personal injury sector. We have the most number of Indigenous community trust clients in Australia, and we have clear leadership now in the Perth and Adelaide markets. Now, being the leader isn't about size, although it's a fairly useful indicator of success. For us, leadership means having the best capability to service the needs of our clients, and with our increased scale, it has certainly strengthened our ability to service our clients by having deeper, more experienced teams in all these areas and being able to invest more easily in technology. Now let me turn to the headline strategies for each business unit. For Trustee Wealth Services, our previous strategic imperative was to achieve leadership in more sectors and more states than what we had previously, and that's now been achieved with AET. Our focus is now squarely on completing the AET integration and achieving the synergies that we've indicated to the market. That includes completing the exit of the platform business there, the build of the NAV1 platform for our whole Trustee Wealth Services business. This means a big focus on upgrading our service model to clients. We're also expanding our asset management capability with the credit strategy and developing our responsible investing capability. In superannuation, we want to focus on larger scale opportunities, primarily in the retail segment, and to focus on operational excellence, delivering member outcomes and meeting all of our regulatory obligations, which are many. For corporate trustee services, the key initiatives will be centred on streamlining processes, digitising that business and continuing to capitalise on the market leading position. And finally, to continue the impressive growth of our new corporate trust businesses in custody and real assets and the debt and securitisation services. As part of our drive to maintain the highest levels of client services, we are in the middle of a 3-year investment in multiple technology projects. This will continue in FY24 with a spend in the order of $2 to $2.5 million. For corporate and superannuation trustee services, the solutions are targeted at creating efficiencies as both those businesses scale. For Trustee Wealth Services, we're well advanced in transitioning to the new NAV1 platform brought to us by TrustKey, with Hub24 as the custodian of all those assets. We're confident of completing this build and transition in the 2025 calendar year. And finally, we're deploying Workday as the enterprise platform for finance and our people function, and we're well advanced with that build, starting with finance this year and people next calendar year. It's important I give shareholders an update on the integration of AET. This chart shows the key milestones for integration. Progress has been according to plan, and essentially we're now left with 2 main streams of work remaining. The first is the integration of the trustee business by completing the build of the NAV1 platform and then transitioning off the Insignia systems. The next milestone for us in that is in February of next year, where the most complex lines of our business, so the continuing or testamentary trust line of business, is transitioned across to the new platform. And the whole build was expected to be completed by Q3 of the 2024 calendar year. The second, exiting the platform business and outsourcing the administration of the small APRA funds. This is a fairly specialised area of business. The process for the platform business of making client referrals to Super Concepts has already begun, and the whole process is targeted for completion in the first half of the 2024 calendar year. Some key achievements so far in integrating AET. We have repriced the AET trustee products and services to align with EQT pricing. We did that on day one after the acquisition. We have repriced the small APRA fund portfolio to ensure its profitability. We've created single client-facing businesses in each of the states and each of the business lines of Trustee Wealth Services. We've already co-located all employees in all states into single premises. We've implemented the EQT governance and risk controls across the AET operating model, fully developed the IT plans to move all of the AET technology across onto EQT platforms. All the IT infrastructure has already moved to EQT. We've closed the loss-making safe custody business that AET had in Adelaide. Some licences have already been consolidated in the advice area and in estate planning, and we're well advanced on our plans for the major trustee and custody licence consolidation for 2024. Importantly, in any acquisition, we have effectively retained the entire trustee client base, all the support of referring partners, and retained all the key AET people that we wanted to secure. Now, the analysis on this slide confirms the financial analysis we showed at the full year results in August. We're well on the way to achieving the expense, revenue and capital synergies we set ourselves, noting our expense synergy target is slightly lower now at 3.1 million. The revenue synergy target's materially higher at $5.5 million, and the $10 million capital release synergy was not originally anticipated. So it means the aggregate synergies of $8.6 million to the profit before tax line and a one-off $10 million capital release, we're confident we can achieve those results within the envelope of the $22 million implementation costs that we indicated at the time of the acquisition. Now, I'm really pleased to report on the momentum of the business in this first quarter. The corporate trustee services business has continued to grow with 20 new schemes already established and seeded in the quarter. Almost 50 schemes in the process of being established, with some $2 million plus of minimum revenue in the establishment process. So this business is in a really healthy shape in terms of our market position and ability to win new business. Superannuation has continued its very strong growth path, with funds under supervision increasing from $44.8 billion at 30 June to be over $50 billion by the end of September. That growth has come from taking on trusteeship of the Future Super Fund, a leading $1.8 billion ESG orientated fund, and a $3 billion transition into the Centric Fund. The near-term pipeline at the end of the year looks very strong as well, and we're currently advanced on preparatory work for a couple of new funds totalling over $5 billion, subject to regulatory and other third-party approval. TWS has continued its momentum, and the combined EQT AET business is really hitting its straps in terms of market presence across all the states and sectors. Now, the outlook for the FY24 year, assuming relatively stable markets, is for higher than usual revenue growth, reflecting the full year impact of the AET acquisition. Very strong levels of new business activity, as you can see from that first quarter, and the achievement of the revenue synergies that we've set ourselves for AET. Expense growth will be higher than usual, reflecting the full year impact of the AET acquisition, utilisation of the majority of the $22 million AET integration estimate in the FY24 year, so we can be clear on that timing now. We have lower vacancy levels, pleasingly, at the moment, and there's an annualisation of a prior people investment from the high vacancy levels we had in early FY22. The AET management rights amortisation of $2.3 million per annum, a non-cash item, comes in, and we're continuing the investment in technology and people to support the growth and develop a more contemporary trustee proposition. Now, the outlook for FY25 is encouraging because we will have reduced losses from the UK and Irish business coming through fully. The AET integration and major technology systems replacement costs are expected to tail off by that time. And finally, the revenue and cost synergies are expected to be largely realised by that time. So in summary, our strategy to focus on trusteeship is holding us in great stead. We've continued to grow strongly in this last quarter and the pipeline is healthy. Our investments in technology are progressing well. Importantly, we've effectively we are well advanced in simplifying the business, in combining our corporate lines of business, exiting the AET platform business and outsourcing of the administration for small APRA funds, as well as exiting the UK and Irish businesses. We're attracting and retaining the key people that we need. The AET integration is well on track and the acquisition provides us with a really strong market positioning. The first quarter started strongly and we expect revenue and funds to continue to rise while net profits reflects the investment for growth and the one-off integration technology costs. So in closing, I'm delighted to continue to lead this business. I want to thank the executive team for their support and all the hard work of our employees who make this company what it is. And a shout out to our employees who came across from AET for all their efforts in transitioning into our group. I want to also thank the board for their support through the course of the year and particularly for Carol's support as the chair. I continue to feel extremely privileged to lead this company and to be able to look after our incredible clients and in particular those vulnerable clients who so heavily rely on Equity Trustees. And to our shareholders, thank you for your support and the confidence you show in this company. So I'll now hand back to Carol.
Well, thanks so much, Mick. Well, ladies and gentlemen, we will now move on to the formal part of today's meeting. The matters requiring consideration today are outlined in detail in the notice of meeting. Equity Trustees' financial statements for the 2023 financial year, together with the auditor's report, are in our annual report, which is available on the website. In order to ascertain the true intention of shareholders and in accordance with the ASX Corporate Governance Council's principles and recommendations, as Chair, I have determined to call a poll on each resolution to be considered at today's meeting. Our share registry provider, Link Market Services, will conduct the voting at today's meeting by way of a poll. Mamata Talang of Link will act as returning officer. Votes will be counted after the meeting and published on the ASX. Shareholders can ask questions on the resolutions at the end of the meeting. I will endeavour to answer all relevant questions from shareholders during today's meeting. However, I do reserve the right as Chair to rule questions as not pertaining to the AGM and to take questions on notice. We will be displaying the proxies received for each resolution on the screen. As indicated on the proxy form and in the notice of meeting, my intention as Chair is to vote all such discretionary or undirected proxies in favour of each resolution. With regard to voting on today's resolutions, all shareholders, proxy holders and authorised corporate representatives who are entitled to vote should have been issued with yellow voting cards. A yellow card also entitles you to comment and ask questions in the meeting. If anyone present is entitled to vote and does not have a yellow card, please see one of the staff at the registration table at the entrance door and they will assist you. Non-voting shareholders have been issued with a blue card upon entering the room, and a blue card will not allow you to vote. However, you may still comment and ask questions. Red cards indicate a visitor. Visitors and media are reminded that whilst we welcome you at this meeting, it is a shareholder meeting, and please don't make any comments or ask questions. If you do have a question, please raise your yellow voting or blue non-voting admission card prior to speaking to identify yourself as a shareholder. If you are acting as a proxy, please state clearly who you are appointed to represent when introducing yourself to the meeting. That was a bit complicated, wasn't it? I hope everyone's got their coloured codes right. We will now move to the first item of business. To receive and consider the financial report, director's report and auditor's report for the company and its controlled entities for the year ended 30th of June 2023. I will take the reports as read. I can confirm that our auditor has not received any questions from shareholders concerning the audit of the company's accounts or their independence. We'll now proceed to the next part of the meeting. Resolution 2. Resolution 2 concerns the election of Mr. Robert Dalton. The proxy votes are shown on the screen. Mr. Dalton has been a director since September 2023. A summary of his experience was provided at the commencement of the meeting, and I would now like to invite Rob Dalton to speak to his election.
Thanks, Carol, and good morning to everyone. As Carol pointed out, I recently joined the Equity Trustees Board, and today I seek your support for formal election to the board as an independent non-executive director. Equity Trustees has a wonderful history and is a privilege to be a director of the company and serve with the board under Carol's leadership as chair. Over the last month, I have attended board and subcommittee meetings and met with each executive of the company. And I've been incredibly impressed with the rigour of the meetings, the calibre, as well as the professionalism of Mick and his team. So why support my nomination as a Director of Equity Trustees? In my career over the last 40 years, I've had 3 distinct streams of experience, which I believe qualify me a suitable candidate to serve on the board of Equity Trustees. Firstly, I've been an audit, assurance and advisory partner at accounting firms Arthur Andersen and Ernst & Young for 25 years. In that time, I've undertaken many complex engagements in different sectors, including the financial services industry. The skills and expertise that I have developed as an audit partner include regulatory, compliance, governance, and most importantly, applying judgment. The second stream started some 35 years ago when I commenced my journey as a volunteer, not-for-profit director. I was fortunate to have the opportunity to serve as finance director for organisations including SIDS, the Centre for Hearing Impaired Children, the Victorian College of the Arts, and sporting organisations including Hockey Victoria, Hockey Australia, the Richmond Football Club and the Australian Sports Commission. I've been a chair of the board, chair of audit and risk and finance director during that time, which has provided me with significant experience as a director. And finally, the third stream of my career has been as an executive, having been the CEO of the Australian Sports Commission for 3 years in 2020, during the enormous challenges sport faced in the pandemic. It was 20 years of experience packed into 3, including hibernating 110 sports, shutting down and restarting the Tokyo Olympics, and dealing with the confronting issues of historical sexual abuse allegations in sport. I also led the Sports Commission on 9 Senate estimates hearings, and 4 days into my role, I led the Select Committee on the Administration of Sports Grants, which was some baptism of fire. I learned about the complex government reporting, the regulatory regime of government, and I learned about layers of compliance. Finally, I commit to bringing my skills and experiences I've outlined above and to work tirelessly with Carol and the board for the continued success of the company. Thank you for listening to me, and thank you for supporting my nomination as a Director of Equity Trustees.
I now propose that shareholders consider, and if thought fit, pass Resolution 2 as set out in the notice of meeting. Resolution 3.1. Given this resolution relates to my re-election, I hand over to Catherine Robson to move this item.
Thank you, Carol. In respect of this item, the proxy votes are shown on the screen. Carol Schwartz has been a director since March 2020 and has expertly chaired the board since October 2020. I'd like to invite Carol to speak to her re-election.
I don't have those notes. Oh, well, I'll have to wing it like Jeff would. It was actually 3 years ago, I think, when Jeff approached me to become involved with Equity Trustees. And he spoke to me about the company with an enormous amount of passion and said, you need to meet the people and you need to learn about the company. And I have to say that I did meet Mick and I did meet the directors, and I was absolutely bowled over with the organisation, the work that it does, the leadership that it had at the time, the board that Jeff had actually assembled, and I actually found it irresistible. And I do have to say that it has been one of the most rewarding experiences of my professional life, and a great privilege and honour to chair this fantastic company. And I hope that all shareholders have in fact been pleased with the results we've been able to produce. I have to say that Mick and the executive team have done an amazing job, and I have felt incredibly well supported by my board colleagues. So I'm looking forward to being reappointed to the board, and I guess I put that submission to you. Thank you.
I now propose that shareholders consider, and if thought fit, pass Resolution 3.1 as set out in the notice of meeting as an ordinary resolution.
Thanks. Okay. Resolution 3.2 concerns the election of Ms. Catherine Robson. The proxy votes are shown on the screen. Catherine has been a director since February 2020. She is the chair of the Board Risk Committee and member of the Remuneration, Human Resources and Nominations Committee, and member of the Audit Committee. And let me tell you, she's been absolutely superb. And I'd now like to invite her to speak to her re-election, I hope with notes.
Thank you, Carol. You're a hard act to follow. I'll actually need to refer to my notes. So as Carol said, I'm Catherine Robson, and I speak with you today to ask for your support for re-election to the Board of Equity Trustees. It's an honour to serve as a director of this company with its long history of trusted service and steadfast commitment to helping others take care of the future. As Carol mentioned, prior to joining the Equity Trustees main board in 2020, I had the privilege to be a director of the subsidiary entity Equity Trustees Superannuation for 6 years. The group's astute strategic investment and focus on safeguarding the best interests of members have seen the superannuation business at Equity Trustees flourish. As Mick mentioned, it's grown from less than $1 billion in funds under trusteeship when I was appointed to the subsidiary board in 2014 to more than $50 billion today. I was delighted to rejoin the superannuation subsidiaries as board chair in 2022, and together with my role as the holding company board risk committee chair, I've benefited from the broad and deep exposure across the entire EQT group and understanding of the complexity of its operations. Having previously spent more than 20 years advising high net worth individuals and families, I have a particular affinity with Equity Trustees' private client businesses and excitement for the transformational potential presented by the AET acquisition. Through my own experience of growing and successfully selling an award-winning financial advice business, I understand the need to deliver exceptional customer outcomes within the highly regulated environments in which we operate to drive revenue growth and expand enterprise value. I've also been able to apply my strong understanding of financial services for the benefit of Equity Trustees, having commenced my career at Macquarie Bank before spending 11 years at NAB Private Wealth. I'm currently a non-executive director at AGM Group, one of the largest mutual banks in Australia, where I chair the Audit Committee. In addition, I'm a director of ASX-listed medical diagnostics company, Lumos Diagnostics. Finally, Equity Trustees' commitment to impactful philanthropy resonates strongly with my own not-for-profit activities in health and education. I'm a previous committee member at both the Walter and Eliza Hall Institute of Medical Research and Cancer Council Victoria, and I'm the current chair of Corowa Anglican Girls' School Council. With your support, I hope to continue to use my knowledge and experience to contribute with energy and focus to safeguard the interests of our stakeholders and to grow value for you, our shareholders. I greatly appreciate your support for my re-election. Thank you.
Thanks so much, Catherine. And I now propose that shareholders consider and, if thought fit, pass Resolution 3.2 as set out in the notice of meeting. Resolution 4 is the adoption of the remuneration report. Resolution 4 concerns the adoption of the remuneration report for 2023. In respect to this item of business, the proxy votes are shown on the screen. I now propose Resolution 4 as set out in the notice of meeting and put the motion to a vote. The vote on this resolution is advisory only and does not bind the directors or the company. In respect to this item of business, the proxy votes are shown on the screen.
Chair, can I ask a couple of questions?
Of course.
Or make a couple of observations?
Sure.
I'd like to make a couple of observations, Tim, on the remuneration report and maybe a couple of suggestions for the REM committee. At page 52 of the REM report, you reference a solid 5-year TSR of 47%. It is 47%, but the 4-year TSR is less than half of 1%. The last 4 years have been very ordinary. It's been a very ordinary experience for shareholders the last 4 years. It's particularly poor. At page 53, you reference introducing a second measure based on relative TSR for the LTI plan. Now, there used to be a 50% weighting to relative TSR for the MD, but that was changed because the REM committee at that time felt that the relative peer group were not competitors or directly comparable to EQT, and we got rid of it. I'd like to suggest you think about using an absolute TSR. I'm a big fan of absolute TSRs. At page 58, you state the range of LTI is 30 to 60% of tech over a 3-year measurement period. A couple of points on that. Firstly, I think the opportunity for the team's too low and should be more like 100% of tech. But at the same time, the hurdles to achieve it should be raised. And that would be, I genuinely believe that would be a win-win for shareholders and for management. Everyone we have, hit higher hurdles and management get more. I think that's a really good result. And secondly, 3 years is not long term. It's short to medium term. At a minimum, I think it should be a 5-year measurement period for an LTI plan. And finally, at page 65, there's a table of directors' equity holdings. Mick and Kevin Ely aside, the numbers are very, very modest. I'd like to see a lot more skin in the game from non-executive directors. And there are 2 ideas I could just suggest to you. The REM committee could look at a policy or a change of policy so that, for example, within 5 years of tenure, you've got to have a minimum shareholding of, say, 2 years remuneration, or you do both of these things, have a salary sacrifice plan whereby NEDs can elect a salary sacrifice up to 100% of their fees and acquire shares on a pre-tax basis. You know, a number of other companies do this, Bank of Queensland, Big Yarna Capital Group, and it really gets the directors focused on what they do with pre-tax dollars. You know, there are tax consequences later, but it genuinely works. Anyway, I just wanted to pass that on.
Thanks, David. Tim, do you want to come up?
Look, yeah, I'll take the questions after the first question, which is relating to the performance of the company. I might get Mick to comment on that one. I've made a few comments. I wasn't aware of that earlier history, David, of the relative and absolute TSR. I think the thinking of the committee and the board this time round has been in part driven by a reflection on some of the challenges of an absolute EPS hurdle and the inability really to grow the level of executive share holdings. So it was felt that we should move to a relative TSR. It's a 20% percentage of the overall potential outcome, and we can certainly sort of monitor that. And I think we just simply note at this point your suggestion about an absolute TSR, and I think we've just got to keep these things open as we develop the plan. The opportunity the next comment you made was we should be looking to increase the opportunity on the LTI side, I think maybe the STI as well, or the LTI.
The LTI.
Yeah, LTI, to 100% of tech, along with raising the hurdles. We need to be mindful of I think they're both suggestions we can look at. An off-the-top reaction would be making sure that the total package that the executives are receiving are not out of the market. So if we increase to 100% of the potential hurdles, that is going to require consideration of the total package. That's something we can certainly look at.
But if the results are achieved, Tim, if the shareholders have, if you shot the lights out, I think they deserve it.
Absolutely, no. So I think it's worth consideration.
Thank you.
And we will take it on board. Raising the hurdles, we've got a range on the hurdles, under the current hurdles, 4% through to 10%. In my time on the board, which has been a period which has included the COVID issues and a whole range of issues, markets have been very volatile, and that volatility has certainly impacted the level of vesting of shares over that period. That has seen us, on one occasion, exercise a discretion. We haven't just exercised discretion since. What we have done, though, is lower that level of vesting at down to 4% from 5%, keeping it 10%. Again, we will certainly keep an eye on the level of stretch involved in achieving the hurdles. At the same time, we've got to try and ensure that we do have a program that is valued by our executives and that they do increase their shareholdings. But again, happy to take it on board, along with the 3 years and 5 years. Probably make no additional comments other than we're here and we'll look at it.
Before you move on to the director remuneration, are you happy for me to just add one additional point? So obviously, remuneration is all about driving for our objectives and particularly aligning, our company interests with shareholder interests. There are some regulatory overlays in addition for our company. So as an APRA, with an APRA regulated subsidiary of the superannuation business, there's a whole raft of new regulatory requirements that the business needs to embrace through the financial accountability regime and the 511 requirements. So a number of our executives within the superannuation business, but also at group level, will also have their remuneration structures affected by some of those changes. So just to flag with you that there's some additional nuance that overlays some of those comments as well.
Thanks, Catherine. I think your final comment was the view that the director's equity holdings are modest. And you put forward 2 ideas to encourage increasing those holdings, a certain minimum shareholding within 5 years, and a salary sacrifice plan. We don't currently have a minimum shareholding requirement, and There is, if I could foreshadow, a paper being considered by the REM Committee and the Board at the moment on looking at a salary sacrifice scheme, and I should give due credit and acknowledgement to Kevin Ely for drawing this to our attention and underscoring its importance. So I can't preempt where that will finish, but if we do introduce that, David, I'm sure that will, or confident, that will start the journey towards higher equity holdings by directors. So, look, all good points. We will take them on board, and hopefully I've been able to give you some preliminary feedback that is useful.
Thank you very much.
Okay.
Thank you for the question.
So if it was the first question?
Yeah, I'll take
sorry.
David's first.
Yeah.
Thanks, David,
Sorry.
for that question, and of course your numbers are right. Well, I guess on a standard basis we do, put the 5-year return there, and we've always done that, but the 4-year return's right. I guess a couple of things just to think about on the 4-year return. It has had the COVID period in there, so a pretty difficult period for many companies, and not great movement in market movements, and no free kicks from that. The other issue too is that we were successful in acquiring AET on this, in December of last year, but we've done a lot of work on a previous occasion in looking at that asset. So the whole 4-year period was quite a busy period trying to achieve the goals that we'd finally got to. So I guess I look at it now and say, it's been, and the share price, you've got an ending point on the share price, and probably not at the best ending point at the moment, because the market hasn't seen what's really going to transpire from this acquisition and how we're going basically just organically in the business. So I look forward and go, the next couple of years it should be a very positive time for this company and what we've set up.
Okay, thanks for the questions. Resolution 5, increase in cap on the non-executive director's remuneration. Resolution 5 concerns the increase in aggregate remuneration paid to the company's non-executive directors. In respect to this item of business, the proxy votes are shown on the screen. I now propose that shareholders consider, and if thought fit, pass Resolution 5 as set out in the notice of meeting. Thank you. Resolution 6, approval of granting of long-term incentive award for Managing Director. Resolution 6 concerns the granting of a long-term incentive award to Mr O'Brien as part of his compensation package. A resolution of this type is put to shareholders each year in line with Mr O'Brien's employment agreement. The proxy votes are shown on the screen. I now propose that shareholders consider, and if thought fit, pass Resolution 6 as set out in the notice of meeting. Now we've got some time for general questions if there are any more questions. Yes, please.
Hi, my name's Rod T. I think you mentioned in your opening address that there had been a profit increase from 2022 to 2023. I think the managing director repeated that. In the statement of comprehensive income, the profit figure in fact goes down. I presume that's explained by the acquisition only being the accounting part of the year.
I think that might be a good question. Thank you for the question for our Chief Financial Officer to take his to the annual report for Monday. What page are you referring to?
So consolidated statement of profit and loss, page 74. The quoted equity attributable to equity holders is 18.8, which is also the figure that's mentioned in the highlights on page 6, and that figure goes from 24 million roughly down to 19 million roughly.
Phil, do you want to come up here to respond?
And also, if I could just add to that, if I'm right, and that's due to the acquisition not being there for a full year, do you anticipate that the earnings per share figure, right down the bottom of the page, will return to the previous 2022 figure or better?
Perhaps just dealing with your first question around the nature of the profit. The distinction is between the statutory and the underlying profit. if you look at the group financial performance outlined on page 32, you'll see a reconciliation and a setting out of the underlying profit as well as the statutory profit. And you're quite right, there's a number of significant one-offs that impacted the statutory profit, and they're set out there, including the AET acquisition integration costs, other M&A project costs from previous years, the impairment of our investment in the European business, and major technology systems replacements costs. Stripping those one-off items out, the underlying profit is much healthier.
So that's the figure 24.4 to 29.5.
Essentially, yes.
Is what you're referring to.
Yeah.
Okay. And what about the second question? The diluted earnings per share, do you anticipate that returning to the pre-2023 figure?
Look, I think for what we've said is that, and Mick referred to this in his presentation, in FY24 there's going to continue to be a number of one-off costs. Some of these technology projects are still underway. But for FY25 we're going to see there's a reasonably encouraging outlook. The losses from the European business should be much reduced. The one-off costs around technology should be largely behind us, and the earnings in the company have got a good chance of being significantly enhanced.
Thank you.
Thank you. Thanks, Phil. Yes.
Graham Smith. I note the exit from the UK and Irish businesses. I think Equity Trustees got involved in those relatively recently. What went wrong?
Do you want to answer that? Nick, over to you.
I'll take the microphone just so it goes through on the recording. It's going to be quicker for me to say what went right. No. Look, what went wrong? Our hypothesis was that we had a very good client base of fund managers here in Australia and a lot of global fund managers in our client base. And we provided an excellent service in responsible entity services to those clients. And if we could provide that same service in another jurisdiction, and the main jurisdiction we were looking for was Ireland, because that's a centre for funds managers to operate schemes out of, then we wouldn't really need to convert a lot of those clients to have a very successful business, because the Irish market is a lot bigger than Australia in terms of funds management. So that was the hypothesis. But what went wrong? Well, a couple of things. Brexit dragged on, so that slowed things for a while. Then COVID hit, so we couldn't have our Australian executives go over there for about 2 years, which made it difficult. But probably the biggest impact was there was consolidation going on by private equity players over there. And in that process, they were reducing fees, and scale was becoming very important. And I think also, particularly in the UK, the regulator was dealing with a major problem that they had with one fund manager, and as a result of that they took quite a onerous position with the whole industry, which increased our costs as well. So, as I said, it's easier to say what went right quicker than what went wrong. But I will just point out, at that time, you're quite right in saying it wasn't that long ago, it was about 5 years ago. At that same time, we really did three things. We tried to do that. We decided to reshape our superannuation business and make it a pure trustee business. And we also decided to build the corporate trust lines of business in the debt and securitisation side and the real asset side. And so those two initiatives have gone very well for us. That one hasn't. And so we made the decision, and we're now on the exit path, and we'll be happy when we're through that. Yeah, thank you. Thanks for the question.
What was the total cost to Equity Trustees of our experiment over there?
I don't have that number, but Phil, do you want? It's in there.
5 or 6 years, it would have been north of 20 million of losses.
North of 20.
3 to 4 million a year.
Yeah.
But just perhaps there were some things that did go right. We did secure some top-class global clients, Alliance Bernstein, River and Merck, and if we'd been able to maintain those clients at the pricing levels when we put them on through that 5-year period, those losses would have been dramatically reduced. But the market changed around us, and that was very difficult to deal with.
Yeah, excellent point. Yeah, thank you, Phil. Thank you.
Thank you. Any further questions? Oh, thank you very much for the questions. Well, that concludes the formal business of the meeting, and we'll now conduct the poll on all resolutions. Persons entitled to vote on this poll are all shareholders, proxy holders, authorised corporate representatives who hold the yellow admission cards. Proxy holders with open votes will need to mark a box beside each resolution to indicate how you wish to cast your vote. Furthermore, shareholders need to mark a box beside the motion to indicate how you wish to cast your votes. When you have finished filling in your voting paper, please lodge it in a ballot box to ensure your votes are counted. If you require any assistance, please raise your hand. Hope everybody's got pens who need pens. Thank you. Well, that concludes the formal business of today's meeting, and I declare that the poll is closed. After the votes have been counted, as I said before, the results will be released to the ASX. Now I'd like to invite everybody to join us for some light refreshments, a cup of tea before you leave, and on behalf of the board and the whole team, I'd really like to thank you for joining us here today. Thank you.